Okay, good evening, everybody. Hello and welcome. We'll go ahead and get started. My co-host has not yet joined me, so I am controlling the waiting room as well as the rest of the administrative features. So please bear with me for a few minutes while I muddle through that. She'll be joining us in just a few moments. My name is Rachel Tripp. I am the Director of Financial Aid here in Student Financial Services at UNE, and I'll be joined shortly by my colleague, Nicole Boucher, who's the Assistant Director of Tuition Planning and Outreach. Our session tonight is the third in our series of informational webinars for UNE new undergraduate students and their families. We really understand that the college journey can be a very complex one, and it can look very different for every student. And we know that paying for college is a major consideration for your family. As exciting as it can all be, it can still be a very confusing, at times overwhelming process. So we want you to know that we are here to help you along that journey. And that's what really these webinars are designed to do, to help families along the process. So tonight we're going to be talking about student loan options as well as the payment plan option. A few notes before we begin. We are asking that everybody remain muted and also keep their cameras off. If you do have questions, please use the Q&A feature versus the chat, and we will make sure that we address all of the questions that are asked. Nicole will be addressing them throughout the presentation, and then we'll also leave time at the end for additional Q&A. But we do want to keep the presentation moving along, so it'd be helpful if you use that Q&A feature. If you have any personally relevant questions, we'll try to do our best to address them, but please know too that you can certainly reach out to us for one-on-one assistance. We are open Monday through Friday, so you can give our office a call or send us an email at any point, and we're always happy to help. And finally, I do want to note that we are recording this webinar, and it will be made available for future on-demand viewing, as well as our prior webinars that we've had. As I mentioned, this is our third one, so we've had two others, and we have one more, which I'll mention at the end when that will occur. Okay, so as I mentioned, today's agenda will focus on loans. So we'll need to cover some ground that we've already talked about. We want to discuss how we'll calculate the net cost and how to make direct payments or set up the payment plan. And then we'll talk more in depth about federal loans, why they are more advantageous sometimes for students. And then we'll also take a deep dive into Parent Plus loans and private educational loan options. Bear with me for just a second, just letting some more folks in. I know some of you just joined us. We're just getting started, so you haven't missed much yet, but we are going to keep going on here. So let's begin by reviewing the direct costs for attending UNE. The costs listed here are for the entire academic year, which does include the fall and spring semesters. We'll review this in more detail in a few slides, but for now, I do want to note that the tuition for the upcoming 23-24 academic year is $41,050, and that is whether the student is enrolled for 12 credits to 18 credits. That is all the same rate as long as they are enrolled what we would consider full-time. It's important to note that taking at least 15 credits and even upwards of 18 if they can manage it will really help the student along to graduate within 4 years and thus keep their costs down. So although they can take 12 credits and still be considered full-time, it is in their best interest to take a minimum of 15 per semester. Currently, the room and board will be estimated as students have several different types of housing options. So the housing charge here that you're looking at may be different from what your student is ultimately charged. The July bill that we will send eventually will have the final cost for their specific room assignment. The room right here that you see does include a 17 meal per week dining plan, as well as residence halls for them to live within the residence hall. And then finally, the general service fee. This is a fee that all students are assessed. It covers things like participation in activities, clubs, use of laundry on campus, printing, access to transcripts, and access to our facilities, the on-campus gym, attending sporting events, and other various activities that take place on campus. And I do see Nicole has joined us, so welcome, Nicole. Thank you for hopping on.
Hi guys, sorry I'm late.
No worries. All right, so in order to help you plan for what you need to borrow, it's important to understand how a student's budget is built. First, we'll take a look at the costs that will appear on the bill. So that's going to be the tuition, the room and board, and the general service fee. We also add in other costs students encounter but might not need to borrow for. Those are what we call indirect costs that will not be on your bill. These two costs give us the total cost of attendance or budget. We use the terms interchangeably. As you can see, the indirect costs, they may vary from student to student because students do have some more control over that versus the direct billed costs. Those are pretty straightforward, and there would be little variation besides the room and board depending on which residence hall they end up in. And of course, if they are living at home, they will not be billed for room and board. And eventually, if they do live off campus as a senior, or if they're in the dental hygiene or nursing program and are moving onto the Portland campus, most students do live off campus in those instances. I do want to take a few moments to cover our out-of-pocket payment options, of which there are several. First, we want to note that you can mail in payments either by check or by credit card using the information that will be provided on the back of your bill, which we will send out in June, and those bills will be due in August. That is for the fall semester. You can also make an online payment, which is what we do recommend for use of convenience, and it's a direct payment right to the bill through our portal that we call TouchNet. Here you can either make a one-time payment, or that's also where you can enroll in our interest-free tuition payment plan. When using TouchNet, the student first has to make the payer, whether that's a parent or somebody else, another person in their life who is graciously willing and able to make payments towards their bill. They do have to add that individual as what's called an authorized user before they can access and use the online TouchNet portal. Finally, you can also stop by our office, of course, and make payments, although, as I mentioned, the preferred method is to use the online option. And all of this information is available on our website there at that link that you see. We always recommend that students take advantage, first and foremost, of the federal direct loans that are offered as part of their financial aid package. These subsidized and unsubsidized loans have a variety of benefits, and understanding that they are loans, they are some better loan options to take advantage of should you need to borrow. These federal loans come with a flexible interest rate. The interest rate is set annually by Congress every summer, typically by July 1. So that interest rate currently is 4.99%, but it could be different starting next year because it is subject to change. Another benefit is that the student can borrow these loans directly. In other words, no cosigner is needed and is not required, as would be with private student loan options, which we'll certainly be getting into in just a bit. The next option or advantage, I should say, that I want to mention is that these loans are eligible for deferment while pursuing a graduate degree, or if there is any sort of continued enrollment in an eligible certificate program, they can keep these loans in an in-school deferment, and the student does not have to repay them while they're enrolled. There is a 6-month grace period that begins after they cease attending college, whether that's because they stop attending for any number of reasons, or if they graduate. And if they do continue on to a graduate program, they can keep their loans in deferment. There is also forbearance options in case there is ever any hardships that the student may encounter if they're not enrolled in school, so they don't qualify for an in-school deferment. There is hardship forbearances that are available that the student would want to work with the lender, the loan servicer, to obtain that forbearance status to keep the loan in good standing. And also do want to mention too, public service loan forgiveness is available for these loans. We won't spend any time talking about that because that in and of itself is a very big topic that is ever evolving given our current state of affairs, and certainly will continue to do so. But we do want to mention that there are potentially loan forgiveness options, and the Federal Student Aid website is a great resource to take a look at if you are interested in learning more. Finally, there are a variety of repayment options. So there are some income-based repayment options that students can take advantage of with those loans and again, these are the federal loans. Once you've figured out your net costs and you've determined what you're able to pay out of pocket, either through a one-time payment or by utilizing the payment plan, or possibly both, you can certainly do that as well. It's time to review the loans. For families considering borrowing to bridge the gap between the cost of attendance and the financial aid award, there are a few different loan options. As I mentioned, Parent Plus loans, private loans, and there's also private parent loans. And we'll definitely take a deep dive into some of these in just a bit. But first, let's talk about how much can I borrow versus how much should I borrow. It's important to remember that every dollar borrowed can add up significantly. There really is a big difference between what you can borrow or what your student can borrow versus what you should borrow. So let's review. As discussed, how the school builds the cost of attendance or the student budget, that does play a big role in how much you can borrow. To determine that, we take the annual cost of attendance and deduct all of the financial aid, including any from UNE, as well as outside resources or scholarships that they are getting. That's what they can borrow according to the federal government. However, we do want to emphasize and be sure that students are not overborrowing and taking on deeper debt than necessary. So to keep loan debt in control, we do recommend borrowing only what's needed to cover your charges after your financial aid is factored and considered and cash payments are applied. Students do have the option to work and support their miscellaneous needs during the school year, which certainly can help keep borrowing to a minimum. They can work as a work-study student if they are eligible, or there are some non-work study opportunities on campus, which we're certainly happy to talk more about with your students at some point, but we do encourage students work to help minimize borrowing any more than necessary to cover their bill. Here's just a quick glance at the Parent Plus loan versus the private loan options. One major difference is that the rate on the Plus loan is fixed, whereas private loan rates can be fixed or variable. For the plus loan, credit scores and debt to income ratio are not factors in the credit decision. The federal government is looking more generally at your profile to be sure there are no bankruptcies, foreclosures, or significantly late payments, 90-day late payments or more. Private loan decisions, conversely, are based on more traditional credit factors in a similar fashion as they are with commercial credit, like mortgages, cars, personal loans, sometimes credit cards. So there's quite a difference between the credit factor between private loans and the Parent Plus loan. The Plus loan also collects an origination fee where private lenders typically don't, which is a nice feature of these private loans. And while we welcome you to explore a loan, remember that you really are never alone, and we understand that this is a bit overwhelming and there's a lot to it. So we're always available to walk you through any of these options in more detail should you need it. Before we move on to discuss private loan options, let's go over some additional information about the Plus loan. So first, when you are thinking about that loan and actually applying for it, be sure that you're choosing the Parent Plus loan and not the Graduate Plus loan. And also that it's the applicant as the borrower, or excuse me, that it's the student as the applicant and borrower, not the, I'm sorry, I said that wrong again. Make sure it's not the student. Make sure it's the parent who's the applicant and borrower. We do sometimes get applicants in the student's name, and unfortunately we can't do anything with that because it's the Parent Plus loan, and therefore it needs to be the parent that's applying for the loan versus the student. Parents would also need to complete a master promissory note just like you would for any other type of loan. And at the time of application, this is important to note, you will need to decide if you're going to defer the loan payments until after the student graduates or stops attending, or if you want to enter into immediate repayment. In the event of a Plus loan denial, there are a couple of options. The parent can appeal the decision, the denial decision, with the Department of Education, or they can get an endorser in an attempt to get an approval instead of the denial. And conversely, if the parent accepts that the loan is denied, the student has the option to borrow additional unsubsidized direct loan. I do want to note, however, even in the event of a denial and the additional unsubsidized direct loan, there still will be a gap that must be covered some other way, because the unsubsidized loan would only be an additional $4,000. And finally, we do want to point out that the Plus loan cannot be transferred to the student at any point. Some students, however, do work with their parent. If you're planning to do that, it would be an arrangement explicitly between parent and student. If the student plans to pay the Plus loan versus the parent, or some students can also look into refinancing and doing a student refinance loan to use to cover that Plus loan and then repay that other loan instead of the Plus loan. Okay, so now we'll go into a little bit more detail about our private student loan lenders who are on our recommended lender list. Just remember, our preferred lender list is only one option when you're choosing a private educational loan lender. You can actually choose any lender that you wish. If there is a lender that you would like to work with that are not on our list, you can certainly use them. We just have this list because oftentimes families are asking for a place to start. And we have pre-existing relationships with all of these agencies that we'll go through. So we encourage you to start there and to work with them, as we feel they offer solid loan products. We have vetted them all, and we feel that they offer competitive loan products. They offer great borrower benefits, a lot of them, and good customer service. So as we go through these options, it is worth noting that benefits for all of these loans will tend to be similar. This is because lenders are in competition with one another for your business. So as you can see here, Sallie Mae, they have no fees to originate the loan, multiple repayment options, and so forth. So a lot of these lenders and their benefits will look similar. There are some variations, but again, all of them are great lenders. We have a meeting tomorrow, actually, with one of our loan reps, our Sallie Mae loan rep, in fact, just to touch base with her and to see how things are going in the loan world. So with that, we'll move on. So Citizens Bank is another one of our lenders on our recommended lender list. They want to point out here that loans can either be borrowed in the student's name with a creditworthy cosigner, and also the parent can be the borrower. So if the student does the loan, then they would need a creditworthy cosigner, whether that's a parent or somebody else who's willing and able to cosign a loan. But a parent could also do a loan in their name, and that's going to be a private parent loan versus that Federal Plus loan that we've talked about. They also offer flexible repayment options, and they have a great website, which does include a lot of helpful online resources, including a student loan calculator, which is probably helpful whether you use Citizens Bank or any other student loan lender. Discover is also on our lender list, and they're another option. They are known for their extensive customer service, which is available 24/7. And they also have some really great scholarship opportunities that they offer to students. And I should mention that Citizens and Sallie Mae also have scholarship opportunities as well. Discover also offers private parent loans that parents can borrow in their name as well. Next, we have the Maine loan, which is a great option from a trusted Maine state-based lender, the Finance Authority of Maine, or FAME. If any of you are Maine residents, I'm sure you've probably heard of FAME at some point. They have a very competitively fixed interest rate, which is lower than than the Parent Plus loan. This loan is available to Maine residents attending approved schools in the US. So of course, anyone attending UNE, and then also if you are an out-of-state resident attending UNE, you would still qualify for this loan, even though you're not a Maine resident. Custom Choice is another lender on our list. They offer special rewards at graduation, including a 2% principal reduction at graduation, which can be a pretty significant benefit. And it's certainly one of the larger reductions that our lenders offer. And they also offer cosigner release options for students who have made a number of on-time payments. The cosigner release option, I always emphasize to students and parents. I think it's a great option if a parent doesn't want to be tied to the loan for the entire life of it, which is generally a minimum of 7 years, usually upwards of 10, sometimes even 15 years while the student is repaying. So once the student has established their own credit and made usually a couple of years worth of on-time payments, then they would qualify potentially for cosigner release. And so a parent could be, or whoever the cosigner is, could be removed from that. Union Federal is a SunTrust product, and they offer loans to international students who have an eligible cosigner. And also, they also offer a cosigner release option. And similar to other lenders, they have a competitive interest rate option, both fixed and variable. They do offer an interest rate reduction with auto debit and an additional rate reduction with 36 consecutive on-time payments, which is a great feature. Finally, we have VSAC, the Vermont Student Assistance Corporation. So they offer loans to students from Vermont. They offer 3 different types of loans with different rates. So VSAC is wonderful. If you are a Vermont resident, I highly encourage you to consider them. they are certainly another good option to consider. So let's quickly review the factors you should consider when you're choosing a private loan lender. So first, you're going to want to determine if you would be eligible, first of all, to borrow the loan. So take a look at your credit and make sure you have a good handle on that. Next, take a look at interest rate ranges and options. Decide if you want to, utilize a fixed versus variable. There are benefits to both, and it really can depend on your preference and how much you want to rely on a variable rate staying low versus a fixed rate, and knowing what the loan interest rate would be for the life of it. You also certainly want to consider any fees that come with the loan. As we noted, a lot of our private lenders do not have any fees, which is great, but there is quite a substantial origination fee with the PLUS loan. And finally, the repayment term of the loan is a very important factor for students and families to consider. So these are the 5 primary things to consider as you are shopping for loans. You certainly want to consider the repayment terms and what their options might be. And this will, of course, impact your interest rate and how much you're repaying for the overall life of the loan when all is said and done. Okay, so as I just went through our recommended lenders, you'll recall I mentioned some of the borrower benefits offered by various lenders. So we recommend closely reviewing potential benefits offered by your lenders as you're researching. For instance, some loans do offer a graduation benefit or scholarship opportunities while they're enrolled. Many lenders offer ways to reduce the interest rate by using automatic deduction or sometimes opening an account with them. So some of the bigger banks like Discover, Citizens. And lastly, as we all know, customer service and ease of website navigation can really, make or break your experience. So that is another important consideration when choosing a lender that you're going to be working with for a number of years. And you want to make sure that they'll be there to help you and answer your questions easily. This would be a good time to address some of the frequently asked questions we often get regarding private loans. So you may find the need to reduce the loan due to changes and costs. So for instance, your student, they are going to be living on campus, but they've decided that they're going to live at home, or maybe they got additional scholarships, and so there is less need to borrow. So regardless of the reason, if you do have to make a change to the loan, just give us a call and we can work with you to make an adjustment as needed. Many students ask if we'll be able to apply the loan, if they'll be able to apply for a loan and be approved for it without a parent or a co-signer. And really the long and short of the answer is no, probably not. That's highly unlikely, as most lenders require the borrower to have an established credit history, and most undergraduate students don't in our experience, and therefore they need a co-signer in order to be approved for the loan. Another question we hear is, will speaking of co-signers, will the loan appear on my co-signer's credit history? And the answer to that is yes. Any loan to which you are obligated to repay does appear on your credit score, or excuse me, your credit report, your credit history. Many people new to the college borrowing process wonder if they need to apply annually for loans or just once for the whole 4 years. So that's a very common question we get. And the answer to that is each year is different in terms of the cost and borrowing needs, and they are separate academic years. So yes, you will need to apply for a loan each year rather than all at once for your entire time. So you potentially might be borrowing a year a loan every year that your student is enrolled. Finally, many families worry that the loan is not going to pay to the account by August 1st. The university, we just require that the loan is approved and processed by our office by August 1st. So as long as you have applied for the loan before August 1st, we would recommend doing it at least several weeks before August 1st. We will work directly with your lender to have the funds dispersed and applied to the student account appropriately. And as long as I mentioned, you've done that leading up to the August 1st deadline, your student would be okay for the billing due date. Here's a screenshot of our recommended lender list where you'll find all of these lenders. You can access this page by going to that link there, une.edu/private loans. You can see on that page the panel that will allow you to go through your different options and sort the lenders by name, type of interest rate, repayment needs, etc. This will really help you along your search through the loan process. So we encourage you to utilize that tool. You can also click on the calculator tool, which will allow you to see this panel. And it's just another way of comparing loans on your own as part of your research. So we are winding down. So let's review the timeline for obtaining a private loan. After you've completed your research, your family will need to determine which loan is best for you and which loan best fits your particular situation and who the borrower will be, whether it will be the parent or the student. I also want to mention too that you could do a combination if you wanted to do a plus loan and also a private student loan, or do a plus loan 1 year, a private student loan the next. Again, there's not one size fits all, and so you can do a variety of options. It's then it would be time to apply for the loan once you've figured out those aspects. And most lenders do have the option to apply online through a pretty simple application process that will generate a decision quite quickly, usually within 1 to 2 business days. I believe it's generally pretty quick turnaround that you would hear. UNE would then be notified about your loan from the lender. And then from that point, we will certify and process it. And then finally, we will disperse the loan after the add drop period at the beginning of every semester, which would be usually around the first or second week of September and at the end of January after the spring semester has started. But again, as long as you have done everything you need to do with the loan application and the loan is received by UNE, we will have it noted as pending credit towards the balance due. Okay, let's quickly review what we have covered. So first up, you'll want to do is determine if your family can make any direct payments, and if so, how much, and if you'll utilize making one-time payments and or our interest-free monthly payment plan option. You'll want to also review your credit report and be aware of your credit status, determine if there's any errors or issues that need to be addressed. I would encourage you to be thinking about doing that sooner rather than later. We also encourage you to spend some time researching the loan options to determine which loan best fits your unique situation. So again, our website is a great place to start, but you are also welcome to use other lenders out there. You will also want to determine the amount that you'll need to borrow by subtracting the financial aid and any assistance the student might get, as well as any out-of-pocket payments that would lower the balance. And if you need help doing that, please reach out to us. We understand that that might be a little easier said than done. So if you need help calculating the balance, please get in touch with us. Finally, you can apply for the loan and complete any required loan paperwork, typically online, and we will be notified of the loan approval and prepare the disbursement accordingly for both the fall and spring semesters, assuming the loan is for the full academic year. If you find that you need to make any loan adjustments once we get closer to August 1st, which is the fall semester bill due date, let us know and we can help with that. We have ways to adjust a loan at any point in the year. So even after August 1st, if you find that there is any sort of adjustment that's needed, we can typically do that. So again, reach out and we are happy to assist with that. Okay, so we hope this information shared this evening is helpful and helpful along your journey with planning for the UNE education and the college finance process. I'm going to take a look at the questions here, and I'm assuming that Nicole's probably been busy answering some throughout the webinar, but we will stick around in case there are any other questions. Looks like, Nicole, looks like you've been busy taking care of them. All right, well, I don't see that we have any other questions. We'll stick around for another moment or two more. But thank you all so much for joining us. We know that your time is valuable and this is the dinner hour. So we appreciate it all the more. Again, we hope this has been helpful and we hope to speak with you soon. Have a great rest of your evening, everybody. Take care.